All right, guys, what is going on? What is good? What is good, man? Hopefully you guys had a good weekend. Maybe you did, maybe you didn't. Maybe you read, maybe you didn't read. Speaking of reading, I said this on my Instagram story or my Instagram notes. I've read 18 books this year, dude. Well, finished 18 books. Some of them I had already started like last year or the year before. But I completed 18 books so far this year. That's exciting. I thought it was a lot less than that. I thought it was less than that, but as it turns out, I actually wrote a list and I even checked my book page. So I'm going to try and make that, by the end of today, it'll probably be 19. By the end of this year, it'll probably be above 20. Not that that's what it's about. It's not reading for the sake of telling people that you've read books or just for the sake of finishing a book just to say like, oh, I've read that book. You know, there are some books I've actually thrown away. Not a lot, but I've thrown away some. I've donated a lot. You know, there's books. There's a lot of books I haven't finished and I'll never finish. But also, not to brag or anything, but I don't read books fast either. I don't try to read them super fast. I try to take my time, take notes, engage with the material. And I'm telling you that for a reason, which we're going to get into here in just a moment. Okay. Yeah, you do got to step your game up. You got to step your game up. As far as indices go today, I have no idea what these want to do. This looks horrible to me. And I don't like it. I don't like this at all. So this was a good day to do a presentation. It's not a presentation, it's a Word document I tossed together in the hour and a half leading up to this stream. And I'll have to clip this later. As you guys know, if there is a subject that comes up from more than one person, because some of you go, excuse me, you go to my Discord inbox, don't do that. Because if we haven't said anything before, that'll just be in the message request, and I won't see it for at least like a month. So don't do that. Some of you hit me up on Instagram. Some people are members, some people are not. And what I don't like doing is answering questions for the individual. Okay? And it's not that I don't want to. I do. But the problem is, if you answer one person specifically in their DMs, or like even in a one-on-one setting, like say we had dinner or something, or a phone call or something, the problem is the rest of the community, a bunch of other people, they miss out. They don't get to hear, you know, the answers either to their questions or ideas that I might have. That's why I don't like it. Okay? This is why I stream all the time, because I'm able to, you know, put information out there. And if you want to be here, you'll be here, or watch the recording or whatever. That way, more people can, right? We got 34 viewers. I'd much rather talk to 34 people than to just talk to one person. Okay? But anyway, coming back to my main point. Sometimes you guys ask me questions and I want to answer them publicly so that way everybody gets value. And I especially want to cover topics that are asked by multiple people. Does that make, drop some ones in the chat if that makes sense? Because I'm guessing, it's just a wild guess here, I'm gonna go out on a limb and say that most of you in the community and even outside the community probably don't talk to each other. You probably don't have a conversation with almost 200 people every single day, right? So you guys may not communicate with each other. So for people who may not communicate every single day, but come up with the same questions or have issues in the same, you know, category, then that to me says, hey, that's important and needs to be covered. You know what I mean? So that's why we're doing this. And then we even had someone in the chat earlier, you know, that said they were about to get into the live account on Top Step, and then they went the other direction. So that is related to the question that I got the other day, which again, I'm not ever gonna name names and stuff, not on purpose at least. But I did get a question the other day. This person says they keep blowing accounts. They also admitted that they don't have control over their emotions. And that they pretty much get wiped in a single day, which is what we call tilt. It's called going on tilt. I think that's a reference to the pinball machine, if I'm not mistaken, but anyway. So, what I did was, okay, I got to be honest with you, all right? I sat with this question for a little bit. I wanted to, see what I could come up with. All right, don't cancel me, chat. Don't cancel me here. But I did take what I put into ChatGPT and see if I could polish it. Well, to see if chat could polish it up a little bit. And it gave some okay ideas, which I included or polished myself. Okay, so it's kind of a joint effort here. Okay, so don't cancel me. But I went into ChatGPT to help optimize what I had already came up with. All right, and so that is the presentation that I want to give you today. There is, I think, eight short points and then a little bit of general commentary, and that'll be it. Okay, are you guys excited for that? Are you ready for that? Drop some twos in the chat if you guys want to know. Okay, we'll be talking about ways to like overcome your trading struggles. Okay, is it going to be a masterclass? No. Is it going to be the greatest video of all time? Probably not. But I know what it feels like to be lost and not have direction, and to be confused on like what to do next, right? And I feel like these are practical ideas that should be able to help you. So hopefully you guys are excited. Let me do the intro real quick because it won't be the same if I don't do it. What's good? Iberneth, Shampoo, Mason, Eric, Jork, Sean, Patch, Roger, 2020, Adam, Jonas, H, Omar, who else? Denelson, Densley, Adam. Oh no, I said Adam already. You only get one, Adam. You only get one hello from me. But at least you're here ready to learn. Mason, finished Wisdom. What'd you think, bro? Real quick before we get into it, what did you think? Because I like Ryan Holiday, bro, but Wisdom was not his best work by far. If I had to list all of Ryan's books, I think Wisdom would be in the lower half. If I'm, if I'm being honest with Wisdom Takes Work, bro. Yeah. I'm still gonna read his stuff, but man, that was an annoying book to read. Big James. I told you. Didn't I tell you guys that? He's like, it's like a hit piece on Elon Musk. But all right, anyway, let's get into it. The obstacle is the way, a brief discussion on trading struggles. All right. Can you guys see that? Or do I need to zoom in a little bit more? Okay. Drop some threes if this is a good font size for you guys. Laws of Human Nature is super good book. Very dense. I'm actually going to do a video on that later this year. I'm going to cover all the books that I read this year in a very brief description. I'm going to do one of those S tier list things. Like, oh, this book was an S tier. This book sucked. I'm going to do one of those later this year. I'm excited for that. I'm going to finish Mastery. So I'm going to cover Robert Greene. But anyway, number one, okay, stop trying to rush success. We as humans, we as people, we are impatient. If you're impatient, the last thing you want to do is buy a sports car, okay? Because you're going to be up the ass of everybody. Because everybody drives slow. All right. Actually, well, a Lambo passed me up the other day. I wasn't mad about it. But, yeah, for the most part, okay? We're impatient. We want to get there faster. We want to make all this money faster. We want to pass combines faster. You know, we want to have, when we're in a trade, we want the TP to smack faster, right? We're people who don't have the patience anymore. We've run out of patience as a society, and it's bad, right? What you have to do, all right, is stop emotionally reacting to losses, all right? Losses are part of the process. I take them, you take them, other people take them. There's no way around it. Your first initial impulse should not be, oh man, I gotta get back in. Let me switch my bias, go the other direction. Not every market condition calls for that. Okay? There are certain ways to do that. Yes, but that should not be your first, like, oh, your trade's fixing to hit stop loss and then bang, you get stopped out. You might be able to feel a little bit, you know, you might take an ego hit a little bit. I ain't gonna blame you for that. But my first thought is, I wonder what I got wrong. I usually zoom out in time frame, or I'll look at the time, or, you know, and be like, okay, you know, what did I miss? Was this an impulsive trade, or was this a good trade that I got wrong? You know what I mean? Your feeling of, I need to get this back, right? Here's number B. I mean, it's all here for you, but point number 2, right? You have to stop trying to get it all back. That's like the revenge trade. Oh, I lost $100. I need to make that $100 back, or it scales up from there, right? Oh, I lost $1,000. I got to get my $1,000 back. That's the wrong way to go about it. It's the wrong objective, because then you aren't focused on the right things. You're focused on getting your losses back, and you're not focused on trading good setups. And that's not good. That's a recipe for disaster. Okay? Revenge trading is not necessarily a strategy issue. Revenge trading is a discipline issue. It could be an emotional issue, psychological issue. It's kind of a risk management issue as well. But that's really more secondary. But the primary reason we, right, revenge trade is because we may not have the highest level of discipline. Okay? You guys agree, or do you disagree? Drop some 4s in the chat if you agree. If you disagree, I don't know, unsubscribe. I'm not like that. Revenge trading is a discipline issue. It's not a strategy issue. Okay? You didn't revenge trade because of a market maker model. You didn't revenge trade, you know what I mean? Because, I don't know, you saw the mitigation model or something. I don't know. It's the discipline. Or the emotions, maybe both. What you need to do as well is take your time and avoid forcing setups that aren't there. You can't look at a chart and then say, okay, that has to be a mitigation because that's a high, low, or low, high, lower, low, whatever, high, low, higher, high, yada, yada. That's a mitigation. No, it's not. You're just looking for the easiest, quickest justification to get back into the marketplace. That's a no-no. You don't want to do that. Okay? So there's point. We got 7 more of these, by the way. This is number 1. And there's no order of importance. It's just a list. And this is how I decided to do it. Okay? So stop trying to rush. Stop trying to be successful by tomorrow. Stop trying to, you know, buy a sports car tomorrow. All right? You don't want to do that. Stop emotionally reacting to losses, or at least, you know, pause before you react. Okay? It's okay to be upset. It's okay to be mad or whatever. You can feel all the emotions you want. It's the actions that matter. Okay? You could be mad all you want. Doesn't mean you have to cuss your wife out. Okay? Doesn't mean you have to slap somebody in the face as much as we want to. All right. So there you go. Stop trying to get it all back. The way, this is kind of off script here, but the way you get it all back, if you remember the coin flip exercise, the way you get it all back is to let the winners run. The way you get it all back is to let the math work itself out over time. Theo, appreciate the €2, I believe that is. Appreciate that. Thank you, thank you. Much appreciated. We up. It was a $0 day. Now I'm up €2 on the day, baby. Let's go. Let's go, chat. Beautiful. Beautiful. All right. Take your time and avoid forcing setups that aren't there. Moving on to number 2. We got a little bit more juice for you. Coin flip exercise for the win. Oh yeah. Oh yeah. All right. Probably spend a little bit more time on this one. Discipline, stillness, patience. All right. Discipline, stillness, patience. A disciplined life is going to lead to disciplined trading. And the corollary to that, I think if that's the right word, is an undisciplined life will most likely lead to a undisciplined style of trading. All right. So that's not good. How can we fix that? B, do the small things. Make your bed, return the shopping cart, stuff like that. Do you guys remember like a month or two ago, I gave you that homework exercise or homework challenge, whatever I don't know what I call it. I think it was a challenge. Do you guys remember that? And I said, hey, look, your challenge this weekend or this week or whatever. I said, hey, take your parking lot, find the midpoint, right? The premium and discount end of the parking lot. And your job is to park in the furthest, right? Park in the second half, park away from everybody and return the shopping cart on your way out. You guys remember that? And I was like, yeah, most of you probably won't do it. Most of you probably didn't do it. I know. I took a lot of shit. But you got to do the little things, chat. You got to do the little things. You got to make your bed. You got to return the shopping cart, right? And what's the point of that? Because a lot of people, when they first hear something like this, they probably think it's stupid. That makes no sense. What does a shopping cart have to do with trading? What does, throwing the trash in the trash can have to do with trading? What does making a bed have to do with trading? This is bullshit. Show me the strategy. Show me the entry techniques. Show me the pyramids, right? I want to be able to add on to winning positions and all this stuff. No. we do that, yes. But the point, okay, is point C. It's not the tasks themselves. I mean, they're fairly meaningless. If you really think about it, what's the point of making your bed? It's just going to get screwed up anyway when you go take a nap or when you go to bed that night, right? It's stupid. Why would I make my bed? That's retarded. True. I can agree with you. And that's not the point. It's because doing them whether you feel like it or not, that's what builds discipline. This is why the shopping cart theory, right, is... Have y'all ever actually read this theory? I'm going to go off script again. I don't care. This is my stream. I do what I want. Have y'all ever read that? Have y'all ever read the shopping cart theory? I need to find it. I think I've read it to you before, but I'm going to read it to you again. Can we do that? I don't care what you think. All right. The shopping cart theory, and we don't know who wrote it. Originally, I think it was from 4chan, and nobody knows who the author is. It's anonymous ID something something. All right. The shopping cart is the ultimate litmus test for whether a person is capable of self-governing. To return the shopping cart is an easy, convenient task and one which we all recognize as the correct, appropriate thing to do. To return the shopping cart is objectively right. There are no situations other than dire emergencies in which a person is not able to return their cart. Simultaneously, it's not illegal to abandon your shopping cart. Therefore, the shopping cart presents itself as the apex example of whether a person will do what is right without being forced to do it. No one will punish you for not returning the shopping cart. No one will fine you or kill you for not returning the shopping cart. You gain nothing by returning it. You must return it out of the goodness of your own heart. You must return the shopping cart because you believe it is the right thing to do, because it is correct. A person who is unable to do this is no better than an animal, an absolute savage, who can only be made to do what is right by threatening them with a law and the force that stands behind it. The shopping cart is what determines whether a person is a good or bad member of society. Right? Oh, we lost a couple viewers here. We got lost in the sauce. Well, hey, again, it is what it is. If you don't want to be here, you got to be here. But the point is, you're not going to get in trouble for not making your bed. You're not going to get in trouble for leaving the shopping cart in a parking spot. It does make you an asshole, but it doesn't mean that you're going to get in trouble. Nobody cares, right? But the point is doing it even though you don't feel like it. And when, again, like I said earlier, when you build discipline in the little things in your personal life, that same discipline will be shown in your trading. Okay? Can we drop some fives in the chat if you guys are with me so far? I love the shopping cart theory. I actually write about it in my next book, which I'm still writing, by the way. It keeps getting better. The more books I read, like, the better this book keeps getting. And that's why I haven't finished it yet. Because I'm like, this just keeps getting better and better and better. I want to release it, but I just, man. I'm just going to move on. All right. Some more things we have to do to build discipline, stillness, and patience. We have to reduce stimulation. That's the phone scrolling or the doom scrolling, some people call it, or even like constantly changing tasks. Okay. Believe it or not, there's a lot of people that come to me for advice about other things than trading. Okay. And one thing I noticed, and I might be this way sometimes. I used to be a lot worse, and I am this way sometimes, but I see this in a lot of people, and it's shocking, and I'm really annoyed by it. What people do is they constantly plan stuff. I'm going to do this. I'm going to do that. And most people just don't do it. I think there's a proverb in the Bible somewhere, and it's like, it's all about action, because mere talk leads to poverty. You know what I mean? And when you constantly change your focus, when you constantly change your tasks, you never spend enough time on one subject to learn it. You can't watch the 48 Laws video, masterclass, I should say. You're not supposed to watch that video one time and then you know all the laws. No. You have to review the video more than once, or at least go through some of the laws 2, 3, 4 times. You have to see it in your chart. You have to see it in your journal. You know what I mean? You have to become familiar with that stuff in order to understand it. By constantly switching your focus, well, okay, I traded the mitigation model for a while, but now I want to go do this other model. I'm strictly focused on that and never look at this stuff over here. And you wonder why you can't find, a good model, because you switch your focus too much. Okay. Now, I may not be the expert on physical fitness, okay, because I'm not, absolutely not. But what I can tell you from real experience is physical fitness plays a really big role in whatever it is that you do. Not obviously not just trading, but like other aspects of your life. Physical fitness is important. We talk about taking walks. If you're a runner, that's cool. It will never be me. I haven't ran in like a decade. Probably won't. Walking is great. Running is not for me. Hydration, okay, water, stuff like that. Not just energy drinks, okay? Diet plays a big role, because a weak body, right? A weak body will be a weak mind, and a weak mind will be weak trading. Okay? So drop some 6s in the chat. if you guys are with me so far. We just did number 1, which was rushing the process. We just covered number 2. I went a little bit off script with the shopping cart theory. But hey, I'm having a good time. I don't care. I'm having a wonderful time. Diet is so underrated. It comes down to performance. Oh yeah. Or when it comes down to perform. Yeah. I agree. I think it was Seneca who said, we're hard. Shit. I'm in front of, every time I try to freestyle, I fuck it up. It is, we treat the body rigorously so it's not disobedient to the mind. There we go. Oof. I thought I was fixing to fumble. No, not today. All right, number 3. We talked about this recently a couple weeks ago. I've been kind of making it a point over and over again the last few streams. Go back to the basics. All right, go back to the basics. One of the most basic principles, the basic law, basically, right? The successful traders trio. How do you become a successful trader? It takes 3 things. No more, no less. 3 things. The successful traders trio comes down to those 3 things right here. Your strategy, which is your edge, your risk management, your money management, and your psychological skills to implement the previous 2. So when it comes to, let's say, over leveraging, that's a risk management problem. That's also a psychology problem or a psychological issue, a discipline issue, right? It's not always about strategy. Strategy is great, right? Smart money concepts, they're superior, okay? I'll say that proudly. I don't give a fuck, okay? They're fucking awesome, all right? They're superior. But when you get it wrong, your risk management is what's going to save you. If you don't have the psychological skills to implement the right stuff, it's not going to work for you. It's not going to work well at all. Okay? I'll put it to you this way. And I'll say this with confidence too. You could trade basic stuff here. Like generalized Google image stuff. You know, bullshit basically. With proper risk management and proper implementation, that person or that trader will outperform the one who has like the smart money concepts but can't manage their risk or can't implement the rules that they need to implement. They will underperform with a good strategy versus the person with a mediocre strategy, we'll say, but have excellent risk management and excellent skills to implement. Okay, you guys get that? So that needed to be said. Go back to the basics. Top-down analysis. You know, if you only spend time on the 5-minute and 1-minute, you're wrong. You're just simply wrong, bro. If you're not aligning yourself with higher time frames, you're going to take bad trades. Okay? The free beginner series, I talk about high probability targets, equal highs, equal lows, low resistant highs, low resistant lows, you know, finding the liquidity and trading in that direction, right? Those are high probability targets. It's just to increase your odds of, you know, either winning a trade or just having that good strategy, right? And follow the models. Market maker models, entry models. There's criteria, right? Follow that stuff. You have to know the rules, okay? So there's number 3. We got to hurry this up because there's 5 more and we're already almost 40 minutes into this. You guys are listening too slow. That's what it is. It ain't me, it's you. All right, moving on. Number 4. Here's a short one, okay? Here is a short one. Number 4, don't beat yourself up for losing. I know, like, you know, when you lose an account or you blow a live account, or maybe you lost like half your account or something, you know, in a couple of days, it can be demoralizing, right? You're allowed to make mistakes. You're learning. And let's be honest, folks, probably 90% of traders or more, 95% maybe, probably trade with real money before they're ready. or probably go try to do prop when they're not ready. Right? We can be honest, right? We can be honest. Most people, they get into trading with real money, or like they try to go the prop route when they're not ready. Okay? You're still in the learning phase. Most of us will be in the learning phase forever. There's always more to learn, but at a certain point though, okay, when you're consistent in your discipline and in your strategy and what you're looking for, stuff like that, then, you know, you're ready, in my opinion. And that's different for every person. So don't ask how long is it going to take. Okay? But you're allowed to make mistakes. You're still learning. You have to learn from them. That's the key. Learn from the mistake or the mistakes, and then try to avoid repeating them. If you repeatedly blow accounts, if you repeatedly over leverage, that means you're repeatedly doing something wrong. Probably several things wrong. You get me? You are consistent. You're just on the wrong side of the fence on it. You're consistently doing what you shouldn't do. So the consistency is there. It's just on the wrong side. Okay? So there you have it. Have a little bit of grace for yourself. Okay? Number 5. Here's a big one. Become a student again. Some people stop being students. I've learned enough. No, you haven't. No, you haven't. I don't need to learn anymore. Okay. That's the peak right there. Short. I'm shorting that. I am shorting that. Soon as you say, I don't need a mentor anymore, short. Because you are going back to a discount, baby. You're done. You are degressing after that. You're cooked. Okay. You have to be a student. All right. Become a student again. Read books. And I opened up with this a little bit earlier before some of you hopped on here. You have to read books and study charts, but engage with the material. Okay? Engage with the material. What does that mean? Here's one of my books. Here's Mastery by Robert Greene. Okay? And I don't know if the camera will be able to pick this up. I've shown you on my Instagram story before. But some of these pages in here, let me make sure I'm pointing to the right stuff here. Some of this stuff has underlines and stars next to it. Can you see that? There's a star right here. There's a star down here. There's a star down here with some underlines, okay? I'm engaging with the material. Sometimes I'll write stuff in the margins, okay? Highlighting, taking notes, stuff like that. I'm engaging with the material. I haven't printed off a chart in a little while, okay? But when I print off charts, I'm typically writing on them. I'm taking a physical pen with the actual chart and I'm writing stuff on there, okay? I'm engaging with the material. The problem with some people who don't want to be students is they don't dive into things. They don't read. They don't print off charts. You know, they think saving a chart, putting it into a fucking folder somewhere, never looking at it again. Oh yeah, John, I journal. You fucking do not journal, bro. That's not journaling at all. You saved a chart and stuffed it in a folder and never looked at it. That's not studying, dog. That's not journaling, bro. To be honest, it's really quite worthless. Am I wrong, Chad? Drop some 7s if you guys are still with me here. Engage a little bit. That's why I ask you guys to drop numbers. Engage a little bit. I need the highest engagement. You should be taking notes, but you know, I'm trying to give you guys some good stuff here. I'm trying to give you guys some good stuff. Review of risk management ideas. Remember, the theme of this whole presentation was this individual had asked me, you know, they blew accounts. They're over leveraging, they're revenge trading. And I'm trying to answer that specifically. Okay. So you have to go back and review the risk management ideas. We have the coin flip exercise. There's a video on that. We've done that. Maybe you haven't. You should. Real quick, side note. The coin flip exercise. I may not. Oh, here's one. Most of us don't really have like coins and stuff anymore, but here you go. You see this? Might be hard to see. This is a quarter. All right, this is a coin. You flip this coin, whatever coin you have, you flip it 100 times. Minus $1 for heads, plus $2 for tails. Or if you want to flip it, I don't care. Pun intended. Tails minus $1, heads plus $2. Who cares? And you do that every single time. Flip it, write down heads or tails. Flip it, write down heads or tails. And then after all 100 flips, then you do the math on it. -1, +2, +2, -1, or whatever it is. And then you see the end result after 100 trades. And I had well, not all of you, but I had a lot of you do that exercise, remember? And you posted, some of you posted your results, and not a single one of you had a negative equity curve. Not a single one. None of you did. Some of you saw losing streaks. You saw winning streaks too. A mix of both. You saw pullbacks. You may even lost the first couple trades, and that account went into drawdown. But every single one of you, myself included, posted the results, and after all 100 flips, every single account was green. And that was the purpose of the coin flip exercise, to show you winning streaks will happen, hopefully. Losing streaks will happen, definitely, okay? But due to proper risk management, making twice as much as you lose, you could be near 50% win rate. Plus or minus 5, maybe 10%, okay? You could be a 40, 45%, win rate, but still be in the green due to risk management ideas, okay? And there's nothing wrong with that, okay? Nobody's gonna come to your house and call you a bitch because you win 30, 40% of the time. Nobody cares. If your account is green, if your account is up, that's what matters, okay? That's what matters. Now, you might have an ego problem. Man, I wish I had a higher win rate. I wish I made more money. Well, be grateful that you're in the green, okay? That's my point. So, a little bit less rambling. Let's go. Risk reduction. The risk reduction is the idea, I think it was in Never Blow an Account Again, or Never Lose a Combine Again, or Never Lose a Funded Account Again, something like that. And I told you that when you're on a losing streak, you reduce risk, not increase risk. You do the opposite of what most people do, right? So if you're risking $100 per trade and you're on a losing streak, then you go down to $50. If you lose that one, then you go down to $25 until you recoup, that previous loss plus some. Then you can go and increase your risk back to, where you started at 100 or whatever it is. Okay? Mason, you're blocked again. I really don't understand how you keep coming back here. And also thinking in terms of probabilities, not absolutes. Now, there's a lot more to this, obviously, in risk management ideas. There's a lot more. That's why it's a brief discussion. Okay? But one of the risk management ideas is to think in terms of probabilities and not absolutes. You're not going to win every trade. You're not going to win every trade. So if you know a loss is coming up, it'll eventually be here. We don't know which one. It could be trade 1, 2, 3, 4, or 5, or maybe number 12. Who knows? But at some point, a loss will come. So we have to keep the risk management idea in check and not over leverage. Okay? So did we do 7? Okay. Drop an 8 in the chat. And we'll cover the last 3, 6, 7, and 8. Drop some 8s in the chat. If you guys have gotten value today. I don't know how many likes we have on the stream. I can't see it. How many likes do we got? 22. Okay, not bad. Not bad. Drop some 8s in the chat. If you can't type in the chat because you're not a member, at least drop a like on the stream. At least drop a like on the stream. You can participate that way. Your underarm is burning? What happened? What'd you do this weekend, Eric? Did you... Never mind. We're going to move on. Number 6. This is a big one. Okay, this is a really, really big one. You gotta understand this. Number 6, create non-negotiables. Non-negotiables. You know how sometimes when people are dating and they have what do you call it? It's similar to a non-negotiable. It's basically like, oh, you know, if you do this, we're gonna break up, or if you've done this, like, I can't date you. You know what I mean? I forget what that's called. I don't know. Whatever. But anyway, move it on. Create non-negotiables. These are the rules that are going to limit your downside, and it's going to limit over trading, and it's going to limit your blown accounts. You got to create your non-negotiables. These are just some of them. There's a couple more near the end, but at least at a minimum, a max risk per trade. What is the maximum? If you're trading let's say a 50K combine and you're working with $2,000, your max risk per trade should not be $1,000. Really shouldn't even be 500. It should be like 300 at the max. Maybe 400, maybe, if you know what you're doing. But I would probably go $200 to $300 per trade. So you allow yourself a losing streak without, you know, burning that account and having to do a reset or whatever. Okay? Max trades per day. The reason you go on tilt, or the reason that you lost your account, it may not have been because of one or two trades. It was probably that third one or the fourth one or the fifth one is what did it. The first and second one kind of got it started, but the one that really killed you, the icing on the cake, as they say, or the straw that broke the camel's back, was really trade like number 5 or 6. So not only did you over leverage, but you over traded as well. So we got to cover both aspects, right? Max risk per trade, max number of trades per day, max daily, and a max weekly loss limit. You got to have those. Now, the good thing about a lot of these platforms today is you can set those yourself. That'll auto lock you out. That's a good thing. Okay, that's a very good thing. Here's a big one too. You can review your notes before the trading day, which are constant reminders. Write your rules out or type them up and print them off and say, okay, I'm only allowed 2 trades per day or 3 trades per day or whatever it is for you. I'm allowed $100 a day, $500 a day, whatever the max risk per day is. You need to know that number. You need to know what that number is before you go into the trading day. If your max risk per day is $500, should you take a trade with an $800 stop loss? Immediately no. Immediately no. If you can't frame that trade properly, it's not a trade you should take. Or you have to cut your size down. Go from E-mini to micros. If you're already on micros and you're already on one contract and you still can't take that trade, then there's no trade. There's no trade. You say, I cannot take that trade. I cannot press the button because my rules do not allow me to. And you miss out, and that's it. Okay? That's it. We're at the 1 p.m. macro now, by the way. Not that we've looked at any charts today all that much, but number 7, and then we got one more, and then just a couple more general notes, and that's it. All right, number 7, weekly performance reviews. Now, this is why I said earlier that chat was like, well, they may need, daily reviews. I don't agree with that. I don't agree. I think looking at the week on the weekend, I think that's better. So, ChatGPT can kick rocks, okay, in my opinion. Weekly performance reviews. Don't judge yourself. Don't go in there, man, I was retarded this week. I took some dumbass trades. Man, let me go review. That's the wrong mindset to have. Now, you may not be wrong. You probably did some dumb shit. But you have to suspend that. You have to suspend what the Stoics, right, would call the value judgments. Do away with all of that. It's done. It's over with. It's in the past. You can't change it. You have to look at it and go, okay, what did I do? Was my stop too big? Did I enter too early? Did I enter with too much risk? Did I enter at the wrong time? Did I get the bias wrong? You know, what did I miss? Did I not do top-down analysis? Did I fade John? Right? review that performance. The goal is not to, say I'm a retard or not. That's not the goal. The goal is we need to find the patterns and eliminate them. You can look at your results and go, man, Friday is my worst day. Friday, for some reason, I just get my ass kicked on Fridays. Stop trading Friday then. Just stop trading Friday altogether. Monday AM session rips a lot of people. If Monday AM session in indices rips your ass, stop trading it. Stop trading it. And then guess what? No more ass ripping. Wow. Crazy idea, isn't it? Detach, observe, adjust, repeat, which means detach from the need to label everything. Okay? Stop trying to label it. Observe it for what it is. Observe it as if it wasn't you. You know it was you, but you can observe it as if, this was somebody else. And say, okay, well, if this was somebody else, what did they miss? What did they get wrong? You're looking at the results for what they are, right? To then adjust what needs to be adjusted and then repeat it. Okay? All right, drop some 9s in the chat if you guys are ready for number 8. You guys ready for number 8? Drop some 9s in the chat. There's only a few more minutes left of the stream. There's only a few more minutes left, and then we'll be done. But we haven't really been losing viewers. I feel like you guys have been sticking around, which hopefully means you've been getting value. Because you may need this one day. You may be really good right now. You may not need this right now. You might be like, man, I'm good. I don't need this shit. Okay. Okay. Ego is the enemy. Big fella. Ego is the enemy. All right, have a good one, Roger. I know some people have time constraints. It's okay. That's why we record these things too. So you can just know the minute marker you leave so you can come back and know where to pick back off from. My biggest thing is that I never had this much money in my account. Oh yeah, that'll do it too. So seeing it makes me want more, as well as breaking my rules, like over leveraging and seeing it be a winner. Right. Arm is burning from writing notes, but very nice input today. Okay, thank you, Eric. Appreciate that. Yeah, Adam, trust me. Trust me, I get it. I do get it. I told you that was one of my biggest things, is as your net worth increases, it does become intimidating. It's like, damn, my max trade or max risk per trade's going up, counts going up, net worth's going up. It's intimidating because you don't want to lose it. And at the same time, you want it to keep going. Or sometimes we want to push the envelope. We want to, put the pedal to the metal. That is a dangerous thing. I was actually going to talk about that too in a minute. Thank you, Patch. Adam, whoever said I overcame that? Whoever said I overcame that? You guys have to stop thinking that I'm perfect, because I'm not, okay? I might be a teacher. I might be a streamer. I might run a community of 180-something people, but that doesn't mean I don't make mistakes. That doesn't mean, that I'm just emotionless too. Bro, I'm a person too. What are you talking about? You know what I mean? It's hard though, man. It is. Especially because I don't know each one of you on an individual basis, but someone like me, I had to go back to high school a 5th year for 6 weeks and hang out with all the fucking pregnant chicks and ghetto wannabe gangsters, bro. Like, ugh. You know what I mean? Like, this is one of the worst 6 weeks or 12 weeks, however long it was one of the worst things, bro. I didn't even want to buy a parking spot to school. I parked in between the dumpsters in the back by the soccer field and the football field. It was embarrassing. You know what I mean? 5th year high school student parking at the dumpsters and then going into school, bro. You know what I mean? Like, someone like me should not be where I am today. Okay. The average, you can look this up, bro. The average age for buying a brand new Corvette is 61. I did it at 31. You get me? And I don't say that to try and be egotistical all that much, but like, that's fucking insane. Okay. From a 5th-year high school student who parked between the dumpsters, who was not supposed to make it in life, okay, is teaching you how to read algorithmic price delivery and how to manage risk. It's bonkers, even to this day, okay? So trust me, I get it. Discount of the average range of Corvette owners. Yeah, Mason. Okay. See, you always get banned, but then you find your way back in with some good stuff, right? Whatever. Let's keep going. Number 8, small steps, not large leaps. What's fast doesn't last. What's slow will grow. Slow progress builds skill. Fast progress builds ego. Okay? When I drive my car, 98% of the time, the pedal is not on the metal. Okay? A lot of the time I'm driving, well, let me come back to that. I'm always driving the speed limit. I never break the law. I would never break the law publicly, right? I would never do that. Okay? But there are times where I do go faster than, let's say, 30 miles an hour. Right? Would I do that? Would I do something like that in a school zone? No. Would I do something like that in peak traffic? No. There's too much traffic. And there's too much risk. And the reward is not enough. There are certain times where the second stage of accumulation comes up. Yeah, sure. We can pedal a little bit. Or if there's a highway and there's some open road, or there's a feeder and there's some open road, okay, we may gas it a little bit. But that's only every once in a while. The majority of the time, it's slow progress. That's what's building skill. Okay? What did I open up with? I opened up with impatience. We want things fast. We want things now. No, that's not how this works. I wanted a Corvette a long time ago, but I had to be methodical. I had to plan it out. Okay? It was not an overnight thing. All right? Fast progress builds ego. You know, you take some good trades, a couple good trades in a row, and you start really growing that account exponentially, it becomes a drug. Why do you think I talk about that sometimes? When I'm like, oh yeah, you've got the bug, you've been bit, because you took a really good trade with low drawdown and just straight up, if you were long, or straight down if you were bearish, and you took probably the best trade you've ever taken in your life, and now you're an addict, right? But every trade will not be that way. Okay? What's fast doesn't last. What's slow will grow. Slow progress builds skill. Fast progress builds ego. I'm not saying you can't grow an account fast. You can. But is every single, let's say, change in your equity curve going to be, you know, a 45-degree or a 90-degree angle? No. You're going to take trades that are break even, or you're going to take small wins or partials and stuff like that. It's not always going to be fast progress. Okay? We're losing a little bit of viewers now. I guess the Corvette conversations people don't like, huh? Well, it is what it is, chat. It is what it is. This is the last of it. Okay, here's your additional commentary. Here's your in closing. We do need a Corvette emote. I don't have enough members for that. We got to have more members to add another emote. So we peaked at like 215, and now we're down to like 185 or 183 members. So there's your update on on that. But here, let's get through this and let's close this out for today. Here's your additional commentary. If you over leverage and over trade and all this stuff, I would pay attention here. Stop trading when you take 2 losses in a row. Let's say in a day. Not like 1 trade on Monday and 1 trade on Tuesday and then you're done trading for the week. I'm saying like 2 trades in a day, 2 losses in a day is what I mean. 2 losses in a day, you're done. No third trade. Okay? Break even doesn't count. If you take a loss on a break even, then you still got one more bullet in the chamber. Okay? Stop trading when there's 2 losses in a row in a day. Stop trading after 3 trades total. So if you took a loss and then a break even and then you took that third trade, whatever the outcome of that third trade is it. That's it. Whether break even, TP, or a loss. Whatever it is. Whatever the outcome, that third one, you're done. Stop trading when you met your profit goal. Stop trading if your max daily loss limit is hit. Stop trading if you're feeling emotional. It's okay. It's okay. You can be angry at your boss. You could be angry at your significant other. You could be, I don't know, just emotional. Maybe it's the holidays, or maybe, I don't know, whatever. Maybe you're watching a movie. You know, you're watching Brokeback Mountain or something. I've never seen it, but let's say you're feeling emotional and you don't want to trade. Then don't trade, bro. Don't trade. All right. Stop trading if you have a lack of intense focus. Okay. If you can't focus on the markets, you're at work or, I don't know, trying to make dinner or something. Stop trading. Just don't even bother trading. In the last couple sentences, we talked about this last week. You may not need more wins. You may just need fewer stupid decisions. You can't over leverage your way to success. It's not sustainable. If you over leverage, will it work sometimes? Yeah, it will. I didn't know what else to think of, Cameron. I told you there's no notes here. There's no notes in front of me. I'm freestyling this whole thing. All right. And I saw a meme the other day. That's probably what. Moving on. You can't revenge trade your way to success. You won't see consistency. Will revenge trading work sometimes? Sure. Sure. It's not a question. It's not a matter of if it works or not. It's a matter of consistency and sustainability. Okay? Look, I can gas it. I ain't gonna tell you how fast I've been, but let's just say if there were cops around, I may have gotten pulled over. Maybe. I don't know. Okay? If I were to gas it at all times, that's not sustainable. At some point, I'm either going to run into somebody or run off the road or get pulled over. It's not sustainable. And what we're trying to seek is consistency. Okay? Over leveraging may work sometimes. Revenge trading may even work sometimes. But the moment that an over leverage doesn't work, the moment that revenge trading doesn't work, you're done. You're cooked. So why even try to do it if you know it may work, but if it doesn't, you're cooked. It's not good RR. It's not good for sustainability and consistency. So it is wrong. Okay? It is wrong. And the last thing is the law of quality. We don't want a quantity of setups. We want quality of setups. I don't want to sit here and scalp, scalp here, scalp there, whatever. I want to wait for the low risk buy of a market maker buy model, or the first or the second leg of a buy model, or the inverse, the low risk short, or the first or second stage of distribution in a sell model. That's what I want. I want quality of setups, not quantity of setups. Okay? So let's wrap this up now. Number one, stop trying to rush success. Number two, discipline, stillness, patience. Take care of your body, take care of your mind. Number three, go back to the basics. Cover the 3 things that you need to cover. You might be weak in one area more than another. Do your top-down analysis. Have your high probability targets, your high probability stop losses, right? Well, you know what I mean. Like a stop loss that is unlikely to be hit. That's what I meant. And follow your model. Number 4, don't beat yourself up for losing. Don't beat yourself up because you're imperfect. You are imperfect. I'm imperfect too. Number 5, become a student again. The moment you think you know enough, you're done. You're cooked. Okay, Cameron? For everybody, though, you'll be toast. You have to remain a student. Okay? You can also review some of the risk management ideas if you struggle with that, if you struggle with large fluctuations in your equity curve. Number 6, create your non-negotiables. Max risk per trade, max risk per day, max trades per day, daily and weekly loss limit, and review your trade plan, review your notes before the trading day even begins. Oh, I broke a rule. I didn't even know. Well, yeah, because you didn't review it. You didn't know. Don't not know. Okay? English. Weekly performance reviews every Saturday or every Sunday before the markets open up again. Review your performance. Don't judge yourself. The goal is to be objective. Observe, adjust, repeat. Number 8, small steps, not large leaps. What's slow will grow. What's fast doesn't last. Okay? And I'll show you the commentary one more time, and that's it. We don't want quantity of setups. We don't want a lot of setups. We want the right setups. The right setups with the right proper risk. Okay? That's the key right there. That's the key of today's presentation. Good setups, good risk, good discipline. And without those things, you're going to struggle. Okay? So 10 is kind of too much. Let's go back to 1. Drop some 1s in the chat if you guys got some value today. If you took some notes today. If you understood what we talked about here. I mean, seriously. Do you see this helping you? Do you see this being beneficial? I come on here. I do the shit for free. Anybody can watch. That's my goal here. I want to make sure you get value. That's the point. So that way, you're able to increase your performance. But that's going to be it. Okay? I got a long video now I got to clip out. Or I got to clip down. Some of those rants I probably got to take out. But overall, for a live stream, I think that went as well as it could have went. So, I don't have any other... Ooh, we're lower. That's no surprise. I don't have any bias. Okay, I didn't tell you we'd go lower or higher. This sucks. Today, I don't like this at all. So I'm glad we didn't really talk about anything here. But yeah, we'll be here same time, same place tomorrow on Tuesday the 18th for hopefully more value for the same price. Thanks, Adam. Y'all be good. See you tomorrow.